Good morning. It's April the 30th, 2015, and another month has passed, or almost passed. Delightful weather here on the southern central plains. Again, it's really hard to describe how good 75, 76 degree weather feels for us humanoids. Anyway, here we are. It is post-auction. It's settlement day. The dealers and their customers, clients, are sidelines. Everybody that wanted 2, 5, and 7-year paper is satisfied. So today is clean up the books, and it tends to bring a pause day. And I think we see that in the overnight session. Didn't quite make it to the top of value, but we got this spill yesterday right here. This spill in W period was retested, and it basically held. So we should have buyers 28.08, maybe a little higher to as high as 12. I'm going to try to 5 to 9 area, buy one. We do have some news today that could. And then 29 to 01, might have to raise, probably have to raise that. On the sell side, we're going to make it 19 to 23, then 27 to 31. Lots of volume in the overnight session, probably a carryover from yesterday, the German Bund. After comments from a couple of big money managers, the short of the decade. Why? Because of negative interest rates. It's sold for the second day. So there's a lot of stuff going on that can swirl through the markets today that can impact either equities and or financials. But my feeling is that we're probably going to look at a pause day for the financials. Jobless claims, 288. That's pretty much the default number. Personal income up 0.2. Personal spending, which is where the focus will be, up 0.5. Employment cost index, this one has gotten talked up, plus 0.6. It'd be the second month for a pretty big increase in that. Chicago PMI, right at 50, the tipping point. And AC Fed -2, and natural gas inventories plus 78. Around 80 BCF is where they look for a build, and it doesn't really have much impact on the trading. So number 1, number 2, they'll both hit at the same time. The employment cost index has gotten some tape chatter, then will be followed up by Chicago PMI. So these 3 pieces of news come in early, probably will wash. So personal spending, probably a little more weight than jobless claims, and jobless claims probably a little more weight than the employment cost index. So that's where the news is, and I basically see a trading range. Okay, the knob spread is swinging widely, and it's all over the map. Closed yesterday at 31.11. This morning, a couple hours ago, it was at 30.29, so it's come in further. And the spread is really collapsed. It's off over 5 points in a couple of weeks. That's a huge trade, and it's a huge repositioning of the industry. So obviously, profit-taking fuels more profit-taking, but the consensus underneath the surface is that the Fed can raise interest rates in June. And they left that open, and they took the time, the calendar out of their statement yesterday. So pretty heavy selling in the 30, and you'd have to guess that it's interest rate driven. So where are we right now, resistance and support-wise? We got this spill from 12. Got this last rotate up yesterday at, say, 4 plus or minus. We have the overnight session high at 60.01. We got value area high at 23. We're at 15, so 23, 27, sell 1. And 3 to 7. Gotta give this thing some room. I mean, it just moves big time. 1 to 5 on the buy side, and then 25, 29 by 2. It's a contract that the entire month of April has been unusually volatile and has offered tremendous trading profits. There have been several missteps or misfiring during the day, but they're not all winners. But this thing is regularly throwing off a half point on its rotations, 12 to 16, 30 seconds. So it's a big, big, big contract. And the opportunity has been in the 30-year as opposed to the E-mini this month. The E-mini, the problem with the E-mini is that they don't allow it to sell. And because it's not a two-sided market, you can't bring large institutions set the market's direction. You're taking away half of the market. They're long their portfolios. They're tired of getting burned on their hedge. So the market is turned over to which are affectionately called spoofers, either through high-frequency trading or the other outfits that are out there. And it doesn't make for consistent follow-through, except to the upside. The Chinese housewife is the world's best stock player right now. Why? Because their markets always go up. And I can remember when the stock markets would die back when I was a broker. People would come in and the stock market was dead. They couldn't make any money, and I'd ask them if you'd ever been short. And, you know, their eyes would glaze over, and they said no. And so what they told me right off the bat was that they were long players, and when they made a mistake, the market bailed them out over time. They own the underlying security. And so you have to really ask yourself, am I really as smart as I think I am, or have I recognized, you know, that, or I'm just a long player and the market keeps bailing me out? And I think that's what's going on in China right now. So gold, we're basically buying the 95 to 1200 area, and we're basically selling 1205 to 1210. And I'd look for a sideways market there too. Yeah, that's a good one, Reg. Little Canadian humor there. That's still one of my favorite jokes, how they spell Canada. Okay, the euro is up off the dumping of the German Bund. At least that's what the papers say. Well, it's 25 to 35 is sell 1. Sell 2 will be 50 to 60. London broke it out basically from 1130. Last rotate down was 57. We're at 1209. So this 50 to 60 area, if they decide to liquidate, it'll be buy 1. And then London's low was in the 10 area, 15, so then 15 to 25 will be buy 2. Okay, crude is maintaining and holding its gains here. Part of that is dollar driven. The dollar's down, crude will go up. Have to feel like there's something going on. Syria, the Middle East, the Gulf. When you look at the alignment of the Republicans with the Democrats with really truly a bad deal, these negotiations with Iran, you have to ask yourself, why are the Republicans behind it so hard? And it's really crony capitalism. Somewhere between 50 to 120 billion dollars is going to be released for Iran to spend, and some of that money will come to the United States. And so the businessmen want a shot at that action, and that's why the Republicans are lining up with the Democrats on this. The Democrats are doing it for a different reason. But money, the incentive of money, being able to make something like that, especially when you know what goodies the Iranians need, can really drive a country to do some silly bad things to, over the long haul. And again, you have both parties in Washington doing it. It's not a Democrat issue. It's both parties are lined up on the same page, and got all these poor kids that gave their all or stood up or are maimed for the rest of their lives. Got a feel for them. You know, being a Vietnam vet, I understand exactly how these people feel. You feel betrayed. And all of us have good friends that didn't make it back from that conflict, so-called war. But you can't, when it comes to the buck, there are a lot of people in D.C. that are there just for the buck, and how they get it doesn't really matter. And they come in all stripes and colors. They talk in very principled terms, but when you get right down to it, a lot of decisions are not made on principle or long-term interests, made for money. Life is cash flow, right? Somebody once said that. But there's probably something going on in crude. So you're basically selling against 60 bucks, and you're buying against the breakout at 58.50. Okay, hard to say what's going to go on in the E-mini today. It is the end of the month, but it is the first month of the quarter. So if it were the third month of the quarter, I pretty much guarantee you that no large institution would be out there banging on the market selling it. But first, so we can't guarantee that the market won't sell today because it is the first month. The tendency, though, is on end of the month, end of the quarter, half year, etc. End of the year is for large institutions to sideline themselves and not really stir things up. So based on that idea, we ought to have pretty good support in this 90, 92 area. 85 to 90 ought to be pretty good support. So we're going to make buy 1. 90, 92, buy 2, 85, 87. On the sell side, 2100, 2105. So sell 1 will be 2100 plus or minus 1. Top of value, then 2105 plus or minus 1. Okay, jobless claims, personal income, personal spending, employment cost index. Going to hit. So personal spending plus 0.5 greater than personal income is forecasted plus 2. Jobless claims is a default, and people haven't really been trading this number like they have. And then the employment cost index is up a half a percent. So if you look at the wire services, the news, the financial meme, personal spending and employment cost index will be the first pieces of news to hit the market. Then Chicago PMI at 50, which is the tipping point. And the Chicago PMI is the surrogate for the automobile manufacturing sector of our economy. Kansas City Fed at -2, natural gas inventories plus 78 BCF. So the default number is really kind of 80 plus or minus in the summer. So this will be the number 1 news focus. Number 2 and 3 will be Chicago PMI. Take at least 20 minutes to get everything up. I'm going to get busy on that as soon as possible.